Today I have a special treat for you. I'm bringing on Jennifer Salazar. She blew my mind the other day, and so whenever she comes on, we're going to talk about how you can actually reduce your taxes by one phone call. We're talking about your real estate taxes. We have taxes every single year as a homeowners that come out due to the actual increases created by the county. And so she posted something on her Instagram, I think, or maybe her YouTube, and it just blew me away. She said that there is a way to get those actually, in a sense, in a payment plan structure that can be drawn out more than a year. In most cases, you see that lenders are actually doing it to where it's a year, or you have to pay one lump sum, which stings a lot. But you're going to see here in a moment when we get on with her that she's got some examples and people that are actually already doing it, not only just a couple years, but like multiple years. And we're going to talk about the pros and the cons and the implications of that. So, by the way, my name is Justin Henry. If you do have any questions about selling your home, buying a home, we're here local to help you. We get calls, emails all day long from people looking to buy and sell their house. We're here local to the Dallas-Fort Worth Metroplex. And so, without further ado, let's go ahead and talk to Jennifer. Okay, here I've got Jennifer Salazar with Fairway Mortgage here with me. We're going to talk even further about this amazing way to get your increase in those taxes actually in a position where you can pay them over not just one year, not in a lump sum, but over numerous years. And I just was absolutely blown away when I heard about this, whenever she actually said it on her social media. I think it was on Jennifer, where would you post that on? Was it YouTube? I can't remember
I
exactly
did
when she
on
posted it.
Facebook. Yeah.
Yeah. Well, let's just get right into it. You've been in lending for so long. I've known you really since I got started.
Yeah.
You were an assistant to Linda Davidson, I think way back when in 2006 and 7, and I was just getting into real estate. And I'll tell you what, your team is so very knowledgeable that I always come back to you guys whenever I have a particular question about something I just don't know. And I just want to first thank you for that, and then also really just want to learn more about this because right now, obviously, over the course of the last 20 years, we've never been in a situation here in Texas where we had to fight and work so hard with our taxes. But right now, let me tell you, especially this year and the most previous years, let me tell you, it has been crazy with the tax increases and it really affects people's pocketbook. But
Yeah.
whenever you came out the other day and said that there is a way to stretch out those payments and those increases to make it to where people can't be affected as much, that just made me perk up so much because this could absolutely help homeowners so much in the way that they can just pay their bills, right?
Right.
So,
Absolutely.
um, I guess first and foremost, where'd you hear about this? Where'd you hear about the ability to do this? Because, like I said, in 20 years of me doing real estate, I have never heard about this ability to do this. I've heard of all the other things like short sale, loan modification, things of this nature, but being able to pay your taxes over the course of a longer duration outside of what they actually offer you, that 12 months or lump sum, never heard of it. So, where'd you hear all this?
So my boss, we've always tried to keep up with things to be able to help customers um with keeping their payments as low as they can. And so my boss actually told me about it when, as we've noticed over the last, I would say 5, 6 years, where these taxes keep taking our payments up and up and up. She had done some research at some point, and then I've been spreading the word. And honestly, everybody that has called has been able to get this done where they spread out the payment.
Oh, really? Okay. So you personally know people that have actually done this.
Yes, yeah. And the most recent client that's come to me, she watched my video and she called her mortgage company and did exactly what I told her. And they spread it out further than what I even thought that they would. They
Wow.
spread it out over 4 years, which really helped her because it was taking her payment had gone up $500 a month just from the shortage. And I think a
Absolutely.
lot of people don't realize that your payment's increasing for two different reasons. Number one, your taxes have gone up. So that's just going to happen. But number two, they're catching up the taxes going up from last year. So it's a catch up and it's just the regular increase. And that catch up is what they're taking, that lump sum and spreading it over 12 months to be paid back. But that's a lot, because you're basically doubling between the shortage and the new taxes, you're doubling it up. And so hers went up $510. So when she asked them to spread it over whatever time they would do it, and they did 4 years, it really softened that out for her.
Not even to mention insurance. HO3 policies have gone up by double in the
Right.
last couple of years too.
Right. It's
So, I
wild.
mean, it's unbelievable to see the changes. You know, I'll just say that, you know, with all these unprecedented changes, what other modifications do you think could happen in the future? Now, you know, we know that there's only so much we can do, but are there going to be any other modifications that you think that lenders will take on, or certainly the government?
I don't know that the lender will take on more modifications, because I think it is quite a help already that they'll spread out that shortage. Now, I think it's wild that it takes the communication between the mortgage company and the county. It takes a year which is why we have such a back amount that we have to end up catching up, plus adjusting our taxes in 2023. I think it's wild that it takes a full year to catch that up. So I'm hoping that that will shorten up. And that's the one modification that I think would help a lot of people, because they wouldn't have such a huge increase. But the other, I think that the states, I don't know about all the states, but I know in Texas that the state legislators looking at lowering the cap of our homestead exemption, which is how much the state's allowed to take up our taxes each year. And they're trying to lower it to where they can only go up 5% a year. Currently, it's at 10% a year. So we'll see if that gets passed and if that proceeds, which will help out a ton of people, because 10% a year is not an easy amount when our property taxes are already so high.
Yeah, as values go up, 10% of super inflated value becomes a bigger pie whenever it used to be a little bit smaller pie. We were talking, you know, 150, $300. All right, no sweat over a year. Now we're talking thousands of dollars.
Right. And one thing I do ask is that, I always encourage people to dispute when they see those notices. A lot of people let all this mail get shuffled with all the mail. And I think it's important to pay attention, because we'll all of us, me included, we get a notice of how much they're proposing the taxable value to go up to. And so many people are like, well, they're going to take it up 10% anyways. Let's not dispute it. But mine, for instance, this past year went up 20% in value. While the county can't make me pay more than 10%, they've already set it up to be ready for me to pay an additional 10% next year if I don't dispute it. But I'm disputing, hoping to slow that slope so that next year I'm not already at the point where I might automatically have to increase another 10%.
That's a very good point. And I think that many people get that, but many people do not. That, hey, we're not looking for just this year's 10%, because they ramped you up 27% on your valuation for this year. They're setting you up for the future. You're exactly right in how that's being approached from the standpoint of taxation. Absolutely right.
Absolutely.
So what do these homeowners need to say to try to get this payment plan over a course of years? Who do they need to speak to
spread out? So you would use your mortgage statement. There's always an 800 number to reach your servicer, is what they call it. And if you would not be able to get it done if you called your loan officer that helped you with the mortgage originally. They don't have the power. But if you call that 800 number and ask to speak with the escrow department, and then when you get to the escrow department, the specific verbiage you need to say is, I need to spread out my escrow shortage, and they'll know what you're talking about. So the escrow shortage, they'll know the total of, and then you're asking to get that spread out over 3 years or whatever the cap is that they'll allow.
Absolutely. That's great. And is there any kind of additional fees or interest or anything they tack on to doing this?
No, not at all. I mean, it's just it's your taxes and that's it. They're not making you pay fees. They're not adding interest each year. And to me, when we're asking for this to be spread out, a lot of times if you just let it be spread out and never do a thing about it, unfortunately, next year you're going to get added to it. And then if you ask that to be spread out, it all just keeps like, it keeps piling on. And my hope is that when we ask for it to be spread out, that people, it gives people a breathing room. It gives people a moment, because when they tell you, they're like, okay, your next payment, you got to pay this much extra. There's no time to punt and figure out what to do. So if we do something like this, then we have time to think, okay, do I need to get a quick second job? Do I need to start Ubering? Do I need to, whatever I need to do to just get this paid off? And hopefully people don't take the full 36 months to pay it if they can figure out a way to hustle. And maybe they only take 5 months to pay it down.
Yeah.
But that to me is the hope, is that we all just kind of, it gives us breathing room.
Right. And you know, one of the concerns I would have if I decided to do a 36-month payment structure like this would be that, well, you know, come next year and the year after that, are my taxes going to continuously go up? And so therefore we're just tacking on more and more and more and more. And as you said, the hope would be that you can figure out a way to just pay down that escrow early. Some people don't have the option of doing that. And so at some point, their payments just keep going up and up and up and up. Now, I will say that I expect, and I haven't said as much as some people, I don't know, we'll see, values will come down, I think, next year for many markets. Not every market though, right? We know of many markets around here. You're talking about Frisco or McKinney or these markets where there's still multiple offers, still over list price. I live in a neighborhood where the amount of inventory is so short that they're still having really low day on market, really high multiple offer rates, you know, over list price, which is just mind blowing to me in this climate we're in. But that's still happening. And so there's certainly going to be those markets that we don't have that potential decline. But as we said, you know, in some cases where you're on a homestead exemption, where you're still, call it what, 70,000 in some cases away from where you're actually being your assessed tax versus what it's being appraised at, you got a long way to go, right?
Right. Yeah, you
Yeah.
do.
So that's scary. And that being said, it's important to know you're not getting a pass, you're getting an ability to extend it out. And the other question would be is, okay, you extended it out, can you extend out next year's? Those are
Yeah.
all questions that I don't have the answer to.
It'll just add to the shortage, because your
Yeah.
shortage is going to be one total, and it'll just
Mm.
add to it. And then you can re-ask for a new spread, of course.
Yeah.
But, you know, it's at a certain point, you know, along the way, our incomes increase theoretically. That will help us conquer this. But also, I mean, if you got to hustle, I mean, I think unfortunately, with the way things have gone up, it's something that's going to have to be done to get it knocked out.
Yeah. And finally, how is this going to affect people? Is this going to be, you know, if I decided to do this, is it going to affect my credit? Is it going to be on some kind of list? If I decide to go buy another house, is this going to be in some way affecting me?
So the counties, the state, the cities, they have the right to foreclose. So if somebody allows their property taxes to go unpaid, it is allowed to be done. And that's where we see houses that are on the, what do they call it? The auction block.
Mm-hmm.
These are houses where property taxes didn't get paid. I mean, there's even, a city can even foreclose if enough lawn, if like they notice that your lawn's not been mowed, and then, you know, city ordinance or whatever, they send somebody to do it for you. When those fees tack on, they can foreclose for that if it's never been paid off. So, I mean, they can definitely do that. And then you got a foreclosure, right? Now, whether that goes on, I've never seen it on credit, but it's still, it's a really big deal. I pulled up an article when I knew we were going to talk about this, and they say that $14 billion in the United States does not get paid in property taxes.
Wow.
14 billion. Isn't that wild? And
It is
that's
wild.
where
I don't think we have near that many tax foreclosures in America, but I don't know that fact either.
No, because they also give so many chances. They really do.
Yeah.
They try to work with people.
So you bring up the fact that yes, there are some implications for foreclosure, but if you reach out to your lender and say, hey, I want to extend this, I know that in many cases where, you know, you do an extension like that, or if there's an amount you have to recover or catch up, does the bank actually pay the difference for you so you don't go to foreclosure and keep those payments?
Yep. As long as you're under the umbrella of the lender, they will take care of it, as long as you're just paying them on time.
And so in reality, as long as they have agreed to that 36-month or whatever amount of payment plan structure, the taxes for that year get paid by the lender. You just
Mhm.
have to pay them back over the course of a number of years. Is that right?
Exactly. You're just paying back the
Okay,
lender. They take care of it.
exactly.
And I guess the best way to think of it is you're not when you have a mortgage, you're not the only owner of the house.
Yeah.
The lender also owns a house, and they actually have the biggest, until the house is getting paid down, they have the biggest ownership of it. They don't want your house to foreclose because then they lose the asset that would allow them to make money if you foreclose with the mortgage company. So they will always keep, as long as you have a mortgage, the mortgage company will make sure it stays paid. It's just once you don't have a mortgage is when you see a state or a county being able to foreclose.
Mhm. And so once again, from our understanding that with this payment plan, if we ever decide to sell or buy another home or buy an investment property, whatever, it does not reflect in our credit or any kind of late pay or anything of this nature, correct? With the
No,
lender
yeah,
or anyone.
yeah, no, it
Yeah.
doesn't. As long as you're paying the agreed payment on time.
Yeah.
That's
What
really
about
the bottom
interest?
line.
What about interest? Is there going to be any interest tacked on to that taxable payment stretched out over 36 months that we're aware of?
Nope, no interest.
Wow.
Yeah,
Oh,
it's
that's
just,
crazy.
it
That's just
is.
such a great deal for people right now, isn't it, Jennifer? My
Yeah,
gosh.
it
That's
is.
great. Well, hey, thank you so much for taking the time this morning to speak to me about this. This is an incredible way for people to help them in a, in their payment plan and connecting with their lender and being able to get them to a point where they're just not killed by these taxes every year.
Hmm.
Even if they can't if they can't fight, in a sense, their taxes down, which is pretty much impossible these days with the prices the way they are.
Yeah.
That's just something really great. All they have to do is really just make a phone call, right? One phone
Hmm.
call, and they can stretch this out with no penalty. I think that is just amazing.
Yeah, it's life changing. It is
That's
life
great.
changing.
Jennifer, if anybody wanted to reach out to you and connect with you about this further, where could they connect with you?
They can always reach me on my cell phone. My cell phone's 214-534-5600. I'll one more time, 214-534-5600.
Okay. Hey, Jennifer, thank you so much for being here with me. I think this is incredible information that everyone needs to know about right now.
I agree.
Because let me tell you, as you said, a payment increase of $500 a month or even $300 a month, whatever that amount is for a lot of people, including me, that's a tough pill to swallow. And anything like this can really help. So, Jennifer, thank you once again. And once again, if anyone out there has any questions further, reach out to Jennifer. You can reach out to me. Certainly can go to justinhenryhomes.com, drop a line, or you can reach out to me, 972-757-6273. Thanks, Jennifer. Have a great day.
Thank you.
Bye.